Hello, everyone. Welcome to Wall Street Tactical. We have Steve Kalayjian here, along with Sam Ghosh.
Hello, everyone.
Yeah, so we'll get right into it. If you saw our last two conversations, we spoke to Steve about some of the indicators that he uses for his live streams, as well as, some trends that have been going on in the market along with the Fed. So we talked about SQQQ, as well as different inverse stocks that you could try and take advantage of. So right now we'll get into a little bit about how the market is exploding today and what trends Steve sees.
And before you start, Steve, if you could just comment a little bit about what Mark said about the Fed and recent announcements, and then take it away. Go ahead. Thank you very much.
Yeah, I'm just going to talk. Well, thanks for having me, everybody. And, obviously I have so much passion, and after almost this August 1st, will be 39 years in the industry. So to answer the first part about the Federal Reserve, I don't think they know what they're doing. I mean, inflation's at a 40-year high. Consumer prices over the weekend were reported 7.6% higher than the previous year. People are feeling it. Gasoline's over $4 a barrel. I saw actually $5 in some places, but that was not so.
Yeah, it's $5.50 in parts of California.
California, forget it. And I just think that the Federal Reserve really missed the boat here. And they, again, I go back to the story I told you like a couple of segments ago, was when the Dow was at 10,000, the Fed funds rate were at 4.5%, 4.75%, almost 5%. Now you're at 35,000. And the Fed funds are 0 to 0.25%, and they're talking about rate 50% hike. Fed funds should be 6-7% right now. I know that sounds insane. However, the Federal Reserve has always maintained that if inflation target of 2%, but they blew right through that number, and they don't want to admit to it. So they actually have so much egg on their face that they don't even know what they're doing. And I'm not an academic person. I'm a realist, right? So when you go to the store and you see milk go from $2 to $2.99, and the average person, is feeling it, okay? Whether it's clothing, gasoline, energy. I saw somebody was posting on Facebook that their electric bill is over $1,000 now, and they just stay with covers on now because they don't want to pay the energy bill anymore. So with that being said, the overall tone here is that the Federal Reserve really looks like they don't know what they're doing, right? I mean, these are the smartest people supposedly, and from academic, top schools, but you got to be a common sense factor. And the fact is that when the Dow hit over 30,000, we saw inflation starting to pick up. Now it's completely out of control. Lumber, everything you could think of is just through the roof. But the bottom line here is that what the Federal Reserve failed to do is they tried to stimulate the economy way too long. And by doing that, they caused this massive bubble. But now they're fearful about raising rates because we owe $34 trillion in debt, right? So if you start raising rates, guess what? We take in $4.5 trillion in tax revenue. Every time you raise rates, you start cutting into what you get in taxable receivables on a yearly basis. Eventually, imagine if the Fed funds were 5%, you'd probably use up $600-700 billion of the $4.5 trillion just on tax, on a tax based upon the interest that we owe per se. Right. So what's left? $3.5 trillion, $3.8 trillion, $3.9 trillion to run the government, run the United States. So the Federal Reserve is really handcuffed here, and they blew it. They absolutely blew it. They created a monster bubble, just like in 2008 when Bernanke came out and said that the subprime markets, these are his words, if I remember correctly, that the subprime markets remain contained. Well, really? Well, look what happened to the markets, right? Again, these academic people that, in my opinion, that come from these top schools, you could teach economics all you want. I told you the story. I got a D in economics, right? And I came home and I threw my books over my head, into the window. I saw the window go, whoa, 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 whoa. And my father's like, what's the matter with you? That's it. You're getting a job on Wall Street. So I'm not saying I know everything, but I'm pretty in tune to realize that Ace Greenberg, he ran Bear Stearns. Okay. I was 16, 17 years old, just starting out. I was valet parking cars. And I read one time I was valet parking cars at a country club that he was attending for one of the New York Rangers. And I remember he liked Macanudo cigars. And I ran and I bought 2 Macanudo cigars. They were $5 each. Now, that's a lot of money for me when I'm valet parking cars. That was $1 or $2. So I had to do 5 or 10 cars just to collect that money, right? I remember as I saw Ace, because I got to know him later on and we talked constantly. And I remember when Ace went into the men's room, I followed him. And as he came out, I handed him 2 Macanudo cigars. And I said to Ace, and I said, Mr. Greenberg goes, no, Ace. Ace, I know you like Macanudo. He goes, tell me about yourself. I told him a little bit about myself. And he says to me, I'll take 2 guys like you, 4 guys like you versus 2 guys from, I don't want to mention the name of the college he mentioned. But the fact is that he was saying to me that I had more street smarts than those that he's been around that went to the top universities. And again, I'm not knocking anybody. I came from the school. I'm a needle in the haystack. Okay. I've been blessed, right? I've been given a gift, photographic memory. I stand in front of 50 odd screens. I can see things like that. I wrote algorithms. I can see market direction. I can see things happening.
Right.
Pure mathematics, pure vision, spend thousands and thousands of hours in front of screens, was able to identify, see things. I mean, when I was 13 years old, I stood like this in front of a 13-inch black and white TV. And I watched everybody, their hands, they're throwing, they're this, they're that, they're this, right? And basically, I was able to then, after 1 year, spend 8 years of my life, 9 years building the software that I have currently to help me identify trends, reversals, divergence patterns, and things of that nature that I end up teaching.
So someone like you who has a history of mathematics.
Yeah, but I hated math.
You didn't relate with economics. And, I think that goes to a lot about how the school systems are not built for gifted and talented individuals to challenge. Like, for example, myself and SEG Universe, we're a software development and firm. Building software was a lot of counterintuitive, common sense, street smarts required to understand how to build the solution. So I think, going back to the Fed, they are doing the best they can to maintain the structure that they've set in place, but you're right. But now in terms of the markets, a couple things. There's been massive drops in Meta, Facebook. And what do you think about that drop? Do you think it's hit the bottom? Now, it's not good to speculate, but
I think the highs are remaining in Facebook. I think that you're going to see more competition. More and more people I talk to are leaving Facebook. They don't like the censorship that was invoked. Whether you're a liberal or a conservative, it doesn't make a difference. I think that a lot of people feel that even some liberal friends of mine who are open and about it, and they just say, that's not right. It's not right. And I applaud, because you could have a conversation with anybody as long as you're respectful, and that's how I am. Right. But I think that there are more vehicles that are coming out where people could voice their opinions and they could see things. I never liked Facebook. I mean, just me personally, I don't need to tell everybody what I'm doing on my personal basis type thing.
Do you think what happened to Facebook? Do you think what happened to Facebook will happen to Twitter? Because
look, Twitter stock got cut in half.
Yeah. Right.
Twitter was in the mid 80s. I think I took it off my screen, but I think I saw it around 35, 40 at one point. So it
well, July of
they got a new CEO or whatever.
July of last year, Twitter was at $60 a share, $69 a share, and now it's at $36 a share today.
So it pretty much got. I mean, I thought I saw in the Oh, 69.70. I thought it, yeah. But again, you know, it almost got cut in half per se.
Yeah, they're down 30%. They're down 30% the last 3 months.
It's a lot. It's a lot. I'm not saying that you know, I'm not recommending buying or anything like that. That's not what I'm saying. I just think that you're seeing more platforms coming about that people are getting excited about. You know,
I think social media in general is going to go towards a decentralized development cycle.
I think social media today is going to go more streaming. I think people want what I'm offering on Trade Easy. I think people want streaming. They want to see the person. They want to talk. I think podcasts are going to implode, even though that we've already been in the podcast phase for the last several years. Look at guys like Joe Rogan. I have like 140 podcasts I got to do. People want to hear all my journeys and stories and things that I've done. I think people get really wrapped up on, I think there's going to be a complete different shift in mindset here. I think streaming is, especially in dynamic learning, is going to really take off the next between now and the next 5 years. What you're doing, what I'm doing, I think that's going to resonate with people.
On my notes here, sorry to interrupt. On my notes here, I have this, it just popped up, TaaS, Transportation as a Service. Transportation as a Service. It's been mentioned that because of driverless cars, which are rapidly increasing, there's Waymo has a pilot that's successful in Phoenix. And they're saying that in 5 years, all the transportation as a service companies who are providing parts, companies who are providing AI for driver vehicles are going to be the stocks that you want to get into now, because it's going to change how all consumers purchase cars.
What's the symbol?
It's not a symbol. It's the entire sector. Transportation as a service.
I'm not getting in a driverless vehicle. I'm telling you right now.
Got it. Yeah, but a lot of people.
I take chances, but I'm not taking that type of chance. You know.
Sure, but they're banking. A lot of people are going to order Uber and Lyft, and right now they have a partnership with Lyft in Arizona, where you order the car. There's a person at the wheel, but Lyft has a partnership right now where it's completely driverless in a city.
Yeah, I'm not a fan of that. You know.
There was only like I think Motley Fool was putting out a piece on this. So the only thing that we talk about is transportation as a service is coming. 5 years, it will probably be normal in large metropolitan cities to be able to order a Lyft or Uber without a driver. But I'll send you some of the stocks, Steve, that are.
Yeah, that'd be great to look at. I mean, you know, I'm not really a long-term fundamental type person, even though, you know, you can see trends developing, like, you know, Apple, you know, when I was on the floor of the New York Stock Exchange was like $19 a share, like nothing.
Right.
You know, I mean, look at it now. It's just amazing the way that the company evolved, right?
And Google, right? Before they're split. Why don't you talk a little bit about this split that happened with Google?
I don't really follow Google, so I could bring it up. But I mean, Google being the search engine that it is, I mean, you know, it just is. It's just, I mean, how many times a day do people click on Google to find things? You know, I mean, it's just an enormous entity, you know, and so it really, in the ads that are going through it, and the way you get bumped up, and based upon, I mean, look at me. I mean, my Twitter has exploded, and look at all my posts, and I have thousands and thousands of, you know, segments on Google if you type in my name now, you know. So, so I think Google is really the way it was developed is just ingenious, though, you know. And I think they'll always continue to do well. I mean, you do have other search engines and things like that, but for me, I think that I don't think Google's going anywhere anytime soon, and I think the revenues are going to be very strong going forward for many years.
Yeah, they control over 90% of the market.
Right.
And
I thought it was 80, but 90. Okay.
yeah.
Oh, what a buying
Of the searches. And that might start to change with privacy policies. I know there's like DuckDuckGo, and then there's also Brave, which is
I mean, there could be always going to be others out there, but I mean, I just go boom like that, Google, and I just, what's the phone number for tellies,
So what intraday trades are you looking at the most right now?
What we cover here is all the big cap stocks, the ETFs, the spiders, the diamonds, the Qs, the Russell, futures, the index futures, gold, oil, 30-year bond futures.
So let's talk about that a little bit. Let's talk about something you just gave to your live room, the TQs and the SPY pullback. Talk a little bit about.
So I have a buy strategy. Sorry, I apologize.
Oh, so talk about what you saw. What led you to instruct your subscribers?
So I built my own algorithms, and I have my own trading strategies. And when these algorithms line up to a certain point, they become then a strategy that I teach. And so when I got what's called, again, I have my own language in the room. I'm in my own channel that people, recognize this. And so it's called I have a strategy called a double blue buy, right? So when the 5-minute and the 15-minute, the algorithms line up, I wait for this first pullback, and we got it, and they exploded. So it was a good trading from the long side on this strategy. So the S&Ps pulled in nicely. We had a nice range on the S&Ps. They ran 11, $1.10 on the spiders. The Nasdaq futures ran about 40. The QQQs and the TQs, which correlate with the Nasdaq futures, ran about 50, anywhere between 40 and 60 cents. So it was a really great buy. So right before I got on, I said, this is what I'm expecting to happen. Look for this pullback. Look to get long in this range here. And it lined up perfectly.
So, but you still see this as a short-term buying opportunity, right?
Yeah, no, this was actually, because I do a lot of intraday trading in the room and the channel, but we also do intermediate and long-term views as well when they arise. Like when the market pushed down to the new lows around the 42.12 3/4, I said, guys, you can check out my Twitter. We're gonna get a monster rally where 360 handles or points away from the moving average. We're gonna and what happened in 6 days? We got that monster 300. We got up to 45.80 on the S&P. My short area was around the 45.30. It did say it can get up to 4,600 range, but that would be it. And then we just dropped down to 4,300 after that. So again, I had sell signals on the weekly chart, so that was a monster short pattern. But we caught that extreme oversold condition. We got that, again, that was for the more intermediate to long-term people to trade. So you've seen, like I was buying Apple around the 155 and change. And next thing I know, I kicked it out before the earnings. And then obviously, Apple's up another, $20 north of that. So,
well, the S&P really dropped considerably from 45.80. Now it's 44.52, I think.
Well, actually, yesterday was 43.62, 43.58 yesterday. So we dropped almost 500 off of that, 530 points. But the reason why it's up today is because Russia said they're going to retreat.
Right. I saw that, and with the SPY, do you think that this news is going to continue the uptrend, or do you think it's over?
No, I think that the market's in a lot of trouble here. I think that you have a lot of overhead resistance here. And I think the higher they go, the harder they're going to fall. I think you're on borrowed time here. But I don't have views of like the end of the world scenario, because, I've been around too long. I've seen it all. Long-term capital, the crash of 87. I've seen, 3,000 point drops in the Dow. And, when you see things like that, you've seen it all. I've seen a negative 40 oil. I told you last time I went to fill my pool with oil, and oil hit 95 yesterday, and then obviously retreated $5 since this retreat of. I mean, gasoline's through the roof here. I think inflation is going to be a really big problem here. I think interest rates are going to be a big problem because if the Federal Reserve doesn't do anything, inflation is going to really run out of control here. And I think
they're going to have to raise. They're going to have to raise.
I mean, this is beyond hoopolitis. I mean, they just sit on their hands then they just want, unemployment's at 4%. Okay. All right. You have 11 million jobs, but 8 million people looking for jobs. You have 11 million jobs openings, but 8 million jobs people looking for. So the workforce is there. I mean, you could really have full employment almost. COVID. I mean, I had COVID twice. I was very lucky. The second time I just had a stuffy nose. But for me, I think when you get extremes like this, you should always have cash. I'd be more inclined to be in cash right now than be
or
in
assets
right now.
Like fixed assets, like real estate, are going to go up if inflation goes up.
Yeah, I mean, I'm such a fool. I mean, I was so many times I could have pulled the trigger on 10 or 15 condos here, 10 condos in Florida 30 years ago, 15 condos in Westchester that have now tripled or quadrupled.
Right.
So I will tell you, I own a ton of Legos with the boxes unsealed, and the Legos have gone up about 45. So Legos are a good investment. I'll tell you that.
Wow. I've gone up 50%.
Yeah. Legos are powerful, dude. Really, you can look into that. I got some Legos that I could sell 4 times the amount what I paid, 5 times the amount, 6 times the amount what I paid for them.
Oh my God.
Harry Potter, Batman series, and whatever.
Wow.
Yeah, but the volatility this year, I think a lot of people haven't never seen type of volatility like this as well.
Uh-huh.
Down 1,000, up 1,000, down 500, up 500. I mean, that's why, what we do here, we're able to recognize it and see shifts in the market, see divergences, see, trends. Like today's a trending day. So out of 22 business days in a month, 6 to 8 days a month, you see trends develop, right? Mm-hmm. Trends, ding, ding, ding. And from that point on, they're up all day long or they're down all day long, right? And then 7 to 10 days, you'll see reversals, down and then up, or up and then down. And then 2 or 3 days are where you just want to pull your hair out of your head and nothing's lining up. And like one of them is the FOMC day, where everybody just sits here like this all day long until they speak at 2 o'clock and then if there's a press conference and they wait. But what, again, most important here is the fact that what people tend to recognize is that, the markets are here, the markets are volatile, and this is the major leagues, right? So you got to really invest wisely. You got to trade wisely. I got more and more people now wanting to learn how to intraday trade and intermediate term trade. And I will tell you, I'm a firm believer. I think that the intraday, all these all these financial shows will say, nobody could pick a market. Nobody could pick a bottom or a top. Okay. Fine. Right. Nobody could. Day trading is very hard. Day trading is hard because they don't know what they're doing, right? I mean, I pulled the trigger like millions and millions of times, most likely, right?
Can you talk about that specifically? Just a couple of the intraday positions you called today and last week.
Oh my God! But look at my Twitter. I said the 15-minute time frame. I called monster buys at 9:45 on all the ETFs. I said, look for the first pullback. Boom, they exploded. I said, look at Twitter. I said. On my Twitter, I said, look for the pullback to happen between 2 and 2:30. We got the pullback at 1 o'clock. The S&Ps ran 24 handles, $22.40 on the spiders. Apple made new highs. The IWMs made new highs. Everything pulled in. Mathematics don't lie, right? So we were able to identify in the trend this really phenomenal pattern on the 15-minute time frame that everybody saw with me. We nailed it. It was on. I put it on my Twitter like 11:15. I said by 2:30 we're going to get it. We got the pullback exactly at 1 o'clock, and boom, AMD new highs rallied. Nvidia rallied $4 or $5. The IWMs made new highs. Apple made new highs. Micron, everything just exploded. So,
and what day? What day was this? Just for the viewers, because they'll follow along on the charts.
What's that?
What day was this?
Today. Yeah, look at my Twitter at Steve Kalayjian, and you can see the post that I made at 9:45. I said, look for the first pullback. We got the pullback at 10:10 in the morning, and then I said, look between now and 2:30, and we got that pullback at 1 o'clock.
And your handle is at Steve Kalayjian, right?
Yeah, on my Twitter. I believe that's what it is. Hold on.
That's Steve. Yes, Stephen Kalayjian, Steve Kalayjian.
Perfect. At Steve Kalayjian. That's it.
Perfect. Yeah.
I mean, look at my Twitter's blowing up. People, I put some cartoons and Kaboom with the bull and Kaboosh with the bear, and I make it fun. Again, what's really important is that, you want to be on the right side of the market. And I think with, whether you're trading index futures, commodities, ETFs, individual names, options, like that trade, if you did a call spread or if you bought calls, phenomenal moves here. At the money calls go pretty much in line with the movement of the stock. So, it's yeah.
Like look at Nvidia.
Look at Nvidia. My bull at Kaboom.
Yeah, I retweeted that actually just now. And Nvidia today at 9:30 was 250, and now it's 262. So if you would have followed Steve, if you would have followed, if viewers would have followed you at 9:30 this morning at 250, they could have bought, say, a 255 call or 252.5 call at 9:30.
You could at 9:45. You could have, when I got that buy reversal, and it just went north, and then it pulled in beautifully down to the 255.50 level, and then rallied up to around the 260. Then it pulled in again, and then exploded to new highs. So for
the viewers, look at that, viewers. You want to pay attention to Steve Kalayjian. You want to check his Twitter. You want to sign up for his platform. You want to see what this is about, because Steve is calling it in real time as the volume is happening.
Real time. Absolutely real time.
Not many people
are teaching also. That's the thing. I'm teaching the patterns using my analytics, and the same analytics I have, you can have, right? So it's not like I have an advantage over you, or like you're going to use a Yahoo chart or another chart. You can get the same software that I'm using on your desktop, right? Or even if you don't have a desktop and you're listening on your phone and you know the pattern, if you hear the terminology over and over, it's like I told you the story when I first met you guys, that it took me 30 times to go up and down the driveway to teach my son how to ride a bike, right?
Right.
Okay. So if you hear the same double blues or divergences or this or that, and I'm calling this pattern, hey, get a huge monster buy divergence here on the 15-minute time frame. Boom, boom. This is why this is going to happen. And you're learning, and why. This is constant repetition.
Right.
There's nothing new that I don't say each and every day. Whether they go up, I got the same lingo, or they go down, I have the same lingo. But the more
tell us your lingo. So double blues.
Yeah, I got a double blue buy. I got a triple Lindy. I named it a great strategy off of the movie Back to School with Rodney Dangerfield when he goes on the springboard, right? I have everybody hysterical laughing on that, but it's serious. It's a great pattern. That triple Lindy pattern, or the triple Kabuski, or I have, different strategies that I teach based upon the algorithms. Hey, I got a sell reversal here. I got a buy reversal here on the euro dollar, right? Look for this. Beautiful. Let's short it. Let's look for take advantage of the short. Let's look for the pullback. Pullback, right? That's a word in itself. What does a pullback mean? I'm looking for the price action to drop, to get to a level, and then look to get into long entries. I'm looking for a bounce. If you look at my Twitter, I'm saying bounce, right? Look for the bounce. I'm looking to get short, right? Everything correlated to sell. Correlations, disconnects, for example, where the underlying ETF might be saying one thing on my algorithm, and the continuous contract might be saying something different, because the math is different. The futures contracts trade 23.5 hours in a day, and the underlying ETFs trade 6.5 hours in a day. So you're going to hear me say disconnects or correlations when they correlate. So for example, right now, if the S&P futures take out the 44.66 level, I'm going to get a monster buy signal that would correlate with the underlying ETF. And then we look for a pullback, and then they're going to probably push up to guidance.
And then you'll wait on the next resistance level to see when there's a sell divergence.
I never say the word resistance. I say divergence, right? I'll say, look at this divergence, or look at this. We're 20 handles from the moving average on my moving average. So, you know, like today, for example, crude oil got absolutely slaughtered early in the morning, and I saw a monster buy divergence.
Okay.
People jumped on the crude trade, right, in my live channel. You blinked. 6 minutes later, it was up 45, 50 cents. That's a monster move. Even if you bought one contract on crude oil, monster contract. Even if you bought a mini, right? So we see things here like I don't really care what anybody thinks or says about me, right? I have 50 screens up or 45 screens up for a reason, because I like to see things. I go like that, and I can see things like that, right? Most people can't do it, but I'm conveying the information to them. Right. I'm like the center, and I'm conveying what I'm seeing for them, for the end user on my channel to be able to see things. That was a great long on the S&P.
Is your Trade Easy site up yet? Now?
Next week.
Okay. So where should people go right now? Where should people go to sign up for your room to be part of this?
Well, I have a wait list. They can go. They can contact me at. They can text me at 914-500-7484. They could text me and ask to be part of this. I'm going to be giving it away for 2 weeks to a month for free, and then
we'll put it in our bio here on this video.
And then basically we're going to then do packages $19.99, $59.99, of $19, $59, and $89 on the platinum. But again, what I'm giving is so much information. I'm doing end of day rewinds. I'm doing workshops. I got mentorship programs. But the stream every single day is less than 50 cents a day. If you think of it, though, it's to be able to have access for 7 hours a day, to listen, to learn, to see things and understand after close to 39 years of someone who's been in the game, traded nearly 2 billion shares, and traded FX, traded options, traded, index futures, commodity futures. I did it all, right? Crypto. I can't wait to start doing crypto in here. Bitcoin, Ethereum, a Litecoin. And
amazing.
It's just really, it's just the passion and the love that you have. There's nothing greater at the end of the day when my phone blows up.
Yeah.
People say, look, thank you, Steven. I made $600. I made $300. I made $1,500. One guy called me a week and a half ago. I swear, true story, told me he made 6 figures on one trade, right? It just rocked my world. I mean, it was just
that must make you feel so good in your heart to be able to spread that.
It does, because I don't really look. Yes, we all need money to live and things like that. But when a guy says he makes 6 figures,
right,
low 6 figures number, that's unheard of. Mm-hmm. And to be honest with you, I was just talking, and I just said, "Oh, I see a monster sell divergence here on the S&Ps." Now, I had no idea that person sold, 150 contracts, and then watched it drop, 7 to 10 handles or whatever he made on it. But I get a phone call 20 minutes later. He goes, "Hey, man." I said, "Wait, what's up?" Told me a number. I said, "You serious?" He goes, "Yeah, I swear on my children." I said, "Wow, it's amazing." He said, "Man, I can't thank you enough." I said, and he's been with me, you don't get that all the time. But I want people to be consistent.
He took action. He took your information. He took action. He took precise action. He didn't wait. 100%. He didn't hesitate. So,
100%. He knows I know what I'm doing. He knows listen, am I wrong at times? 100%. I'm not God. Does news come out? Does a pattern sometimes fail? Or if I'm looking for a higher low, does it get down to my target where like today, for example, we called a nice little short scalp. I said, look for a higher low. They pushed down, got into my range, thing go all the way in, and then they ripped. So people had stops in, and people, either pushed, made money, pushed, or maybe lost a little bit on that low one, but then we caught it on the short and then the long. So, but
there's a lot of opportunity right now.
A lot of opportunity. The volatility is insane.
Yeah. Okay. Well, look, I think we're out of time here today. I wanted to first of all just thank you, Steve, again for being on. And
love you guys.
Viewers. And again, my name is Sam Ghosh. We have Mark Verso, we have Steve Kalayjian here. And I'm just going to conclude with just one final thing. Intraday trading does work. in your
Oh
opinion?
yeah. I mean, the bottom line, a lot of people don't have time for it because who's working, you know, I get it. But you could listen on your phones, you can learn, and when you have time, you can listen in. If you hear something going on, you could take. I mean, when that market was dropping a couple of weeks ago, and we were pushing down to new lows, and I'm a complete idiot on the phone. I'm just being honest with you. I think I did like 25 trades on my app. Buying, selling, buying, selling, buying, selling, buying, because I don't have, you know, the desktop version because
Sure.
I'm focusing on, but I knew I was buying Apple, I was buying the SSOs, I was buying the TQs, and I was doing it all on my app on my phone. And when you see things like that, and I mean it, I'm an idiot. And I was just making sure the orders were going in right, hit boom, confirm, boom, out, boom, boom, boom. I mean, I was tracking so many orders that I had to just like, oh my God, I was writing everything down because my eyesight was so small, you know. But you know, I again, you know what, you don't have to sit in front of a computer all the time. You know what I'm saying? You could listen and learn. Every day you learn.
Well, there you have it. From all of us at Wall Street Tactical, thank you again, and we'll see you next time.
Thanks,
sure
thanks,
check
Mark.
Kalayjian.
Thank you, brother. You guys are great. You guys are great. Great guys right here. Thanks, brother.
Thank you. Thank you, everybody.
Bye-bye, man.